Welcome to Investing Insights. I'm your host, Ivana Hampton. Are you putting enough thought into reinvesting your stock and fund dividends? You may have checked a box indicating a reinvestment preference when you opened your brokerage account. Your 401k provider likely checked yes for you when you signed up. If you haven't given it a second thought since, the reinvestment election deserves your attention. Does your decision match your financial goals? And are you managing the necessary details? Morningstar Inc.'s portfolio strategist, Amy Arnott, is here to explain tips for smarter dividend reinvesting. Thanks for being here, Amy.
Thanks for having me.
Well, let's focus on when dividend reinvesting works as a strategy and when it doesn't. Who should consider reinvesting their dividends?
So if you're investing for long-term growth, normally you would want to reinvest your dividends. And if you look at long-term returns for the stock market, it's about 10% per year on average, with dividends making up 4% of that. So if you are looking to maximize growth and really take advantage of compounding over time, normally you would want to reinvest your dividends.
When shouldn't an investor reinvest their dividends?
Yeah, so a lot of people, when they start their retirement, they like to use dividend income as one way to help cover their living expenses during retirement. So if you're in that situation where you're retired and you want your portfolio to generate income to help cover part of your expenses, normally you wouldn't want to reinvest your dividends. Another case might be if you have a large holding in an individual stock and you don't want to keep adding to it because it would make your portfolio even more concentrated in that one stock. You might want to stop reinvesting dividends for that specific holding. And another example would be if you just want to keep things simple and you don't want to worry about keeping a lot of tax records about what the dividend amount was, when was it reinvested, how does that affect the cost basis. If you don't want to deal with all those details, you might just want to take the dividend payment and not reinvest it.
Got it. Are there any differences in reinvesting dividends in a taxable account versus a tax-deferred account?
Yes. So in a tax-deferred account, if you're saving before retirement, normally your dividends would kind of automatically reinvest, and you don't really have to think about it. The dividends just get reinvested, and it becomes part of your portfolio balance that's growing and compounding over time. And you don't have to worry about taxes until eventually you start taking assets out of that tax-deferred account. And then everything would be taxed as ordinary income. So whether it was originally from a dividend or capital appreciation doesn't really matter. Things get a little bit more complicated on the taxable side. If you're reinvesting dividends, you would have to take that reinvested dividend amount and add it to your cost basis in the holding.
Got it. So what types of dividends are taxable and non-taxable?
Yeah, so ordinarily, if you're in a taxable account, most types of dividends from a stock or an equity mutual fund would be taxable. If you're in a bond fund, a mutual fund, or an ETF, most dividends would be taxable unless you're investing in Treasury bonds, which would normally be exempt from federal taxes, or municipal bonds, which could be exempt from federal taxes as well as state and local taxes in some cases.
Now, how long you have owned a dividend-paying stock matters when it comes to taxes. Can you explain the differences between qualified dividends and non-qualified dividends?
Yeah, so it gets a little complicated, and as you mentioned, it has to do with how long you've held the stock or fund. And there's basically a window around the ex-dividend date, which is the first day that the stock or fund trades without that dividend kind of embedded in the price. So there's a 121-day window around that ex-dividend date, and it starts 60 days before the ex-dividend date and then extends 60 days after the ex-dividend date. So in order for the dividend to be considered qualified, you would have had to have held that stock or fund for at least 61 days out of that period. So if you do meet that holding requirement, it would be considered qualified, which is taxed at capital gains tax rates so normally about 15% for most people. But if you don't meet those holding requirements, it would be taxed as ordinary income, which is usually a higher tax rate.
All right, so let's throw some more notes at folks that they probably should keep. What kind of record keeping does reinvesting dividends require, and how does reinvestment affect the cost basis?
Yeah, so as I mentioned, if you're in a taxable account, reinvesting dividends get a little bit more complicated. So you would need to keep track of each dividend amount, when was it reinvested, and then keep some type of record, like an Excel spreadsheet maybe, of each dividend, and then add it to the cost basis as of that date. And then when you eventually sell the holding, you would need to match up the tax lot that you're selling with a specific tax lot, depending on when the dividend was reinvested. So a little bit of extra work there.
It seems like you may need to hire a tax accountant to help with this, maybe not.
Maybe. I mean, the good news is if you're on a major brokerage platform, a lot of them will keep track of your cost basis for you. So you might just want to print out that information and double check to make sure everything looks correct.
Got it. So how are the considerations different for stock dividends versus fund dividends?
There's not really a big difference. So, I would say the only difference would be if you're investing in a bond fund, technically a coupon or yield payment from a bond is considered investment income rather than dividend income. But if it's paid out by a fund, it is considered a dividend. So the same types of taxation would apply.
And what's the final takeaway for the audience about dividend reinvestment?
Yeah, so if you're thinking about should I reinvest dividends or not reinvest, it really depends on what your priorities are. As I mentioned at the beginning, if you're investing for long-term growth, you probably do want to reinvest your dividends. But if you are trying to generate income or simplify your tax accounting, you might not want to reinvest.
Amy, well, thank you for coming to the table and discussing how to reinvest dividends so we can be smarter about it.
Thanks. Always great to see you.
That wraps up this week's episode. Thanks for making this show part of your day. A couple of reminders. Give Investing Insights 5 stars on Apple Podcasts to help others find the work we're producing for you. And subscribe to Morningstar's YouTube channel to watch new videos from our team. Thanks to motion graphic designer Daryl Lannert and associate multimedia editor Jessica Bebel. I'm Ivana Hampton, lead multimedia editor at Morningstar. Take care.